I'll start from from this side. We have Kunal of Kaiser Foundation, one of our supporters in the new fund. We have, of course, Akash. Karthik's already introduced him. One of our companies which are very close to our heart from Fund One itself. Karan Bhagat, the CEO of IIFL and Li Fung, who's actually backed us from Fund One right now. And Mr. Ranavat, who's a senior executive at Li Fung, also a portfolio mentor and advisor, and has been tracking some of our companies. So I want, as always, we're running over time, but with the Star Wars theme, you see the Force Awakens theme. I think it'll be really interesting to get different mixes on. A couple of things. I think one is, for Karan and Akash, in your case, if you can talk a bit about, Karan, let's start with you. What excited you about that space 5 years ago? What you're seeing now, and also challenge us. Right? Where we headed, what you'd like to, your expectations from Blume. And this is a panel before the bar opens, so let's talk about the good side. You can leave the dark side for after drinks. So Karan, let me turn it over to you. Karan is the CEO of IIFL and Li Fung, which has emerged as one of the India's top wealth management firms. And Karan.
To be honest, 5 years back I knew nothing about the space, except for the fact that Sanjay and Karthik were talking about launching a fund more on the seed side. For us, really, it was a very, very exotic space. That's the only word I can use, because we as individuals, we're used to looking at discounted cash flows, doing the Excel spreadsheets before making investments. But they're very convincing, and I had some experience with Sanjay while he invested in a company called M Coach long back. So a couple of years prior to possibly starting Blume with Karthik. And M Coach subsequently was developing into Immobi and growing extremely quickly. So it seemed like a very interesting space, and we had a big call to take because we needed to syndicate it to a few of our clients. And it was a very, very early time. Right now, obviously, over the last 2-3 years, clients have got exposed to seed funds, dime a dozen. But 5 years back, it was a very, in our own mind, quite an aggressive call to take a seed fund to clients. But I think Karthik and Sanjay both knew the space extremely well. Most importantly, we were very passionate about it. And third but not the last, had a lot of skin in the game, because they were giving up what they were doing to do this. So I think these 3 boxes were important boxes for us, and they were ticked. And that's when we kind of decided to come in. We put in not only a little bit of our client money, but we put in a lot of our own money also into their first fund. And 5 years down the line, there's nothing really to regret. I think the guys have done an extremely good job. Some investments are doing extremely well. Some have kind of not done that well. But overall, on an aggregate, I think the results over the last 5 years have been positive, and we continue to support them into Fund 2. But it's all within a voice of caution. Obviously, flow of money has become that much easier in the last 2-3 years for all companies. And as we've learned, the best businesses have got built in the worst of times. So hopefully all these young companies will, while spending a lot of cash on a lot of things, keep in mind the importance of saving money and conserving money, and sensibly build businesses. So thanks Karthik, Sanjay, and wish you best of luck. And as I'm saying this, I'm feeling really old, but that's the way it is.
So if you're feeling old, Karan, I'm feeling even older. One of the exciting things for Karthik, me and the entire Blume team is actually to learn from and back entrepreneurs who are sometimes half our age. So Akash, no coincidence that I'm looking at you, but when we backed you, in a sense, it's scary in one sense. There was projections, but we were basically backing a robotics company. And if we go back to your due diligence, it's a lot of faith in your passion, right, in whatsoever you are building. So, talk about being the CTO and being a techie and never really sort of dealing with outside investors. What has that journey been like? And also, what are your expectations of the investor community as you all are, ramping up on your next roadmap?
Right. I think a lot of times when you start at that young age and you are trying to build technology products, it's always important to have a few set of people who pull you off from that core deep tech and ask you the right questions. I think that's something that I think I enjoyed when we talked with Sanjay and Karthik initially, that you asking the right questions because I think there are no right answers. As soon as you get the right question, you know what is the problem, and then you can go for solve it. Because as a company, when you're starting, any problem, if you know it's a problem, you can definitely go and solve it. And a lot of times you fail because you know that wasn't a problem. So I think sitting with the entrepreneurs on the drawing table and asking the right questions and helping them solve is something that at least I enjoyed in our conversations. And I think that I would say that would be the role I would want Blume to play, along with every company, asking the right questions and sitting with them on their side of the table and thinking it through, that how do you solve the problem, rather than figuring out, okay, that's gone wrong or that's gone wrong, because things would go wrong, and out of 20 things, if 5 things go right, I'm sure you're building a great business, right? So I think that's something that's really good to kind of sit down with young entrepreneurs on the drawing table and solving problems with them. I think that's something which should be continued here.
Thanks, Akash. Kunal, closer to home, you're the sort of one of the newest investors into our fund, and it's quite a crazy market, right? As Karthik was talking about earlier, it's crazy when you have 3 early stage venture firms titled unicorn ventures. So, the question always is, are we getting ahead of ourselves? But we would love to hear from you about what excited you about the early stage space. You've talked to a lot of funds, a lot of startups, and also how you would challenge us. Take a sort of dark side theme where we should be pushing ourselves and pushing, the envelope on our own growth.
I think the unicorn portion we've probably covered substantially. So I'm gonna focus on the second part of your question first, which is maybe I'll talk for a second about why we invested in you, and then why we like the space, and then what we would push you on. So I think seed venture. It's both really difficult to invest, and then at times it can be very easy. I think the difficult portion is you're investing in somebody when you have no idea what they're going to invest in. You're going to make a commitment to something, and you're basically trying to decide if these people that you're investing in are going to be good decision makers, and whether you feel like you can enter into a 10-year, 15-year, or 30-year marriage with them. And I know for us, when we really boil it down, there are all these metrics that you can look at. Have they performed well in the past? Have they done right by their investors? What's their brand like, et cetera, et cetera. But I think when you really break it down, it really just boils down to one thing. You want to invest in people where entrepreneurs are choosing them as opposed to them choosing entrepreneurs. And that fundamental difference is really what we believe separates great firms from good firms or mediocre firms. So at least from what we saw, entrepreneurs were choosing you as opposed to the other way around. And that was what excited us the most. Where we would challenge you, I suppose, is that's great, but it's a lot of work to continue to keep that. I mean, that is the secret sauce. That's the magic. That's the magic. It's really hard to continue to keep that up at a level that is commensurate to what we hope you will be. And then subsequent to that, you're going to have pains in the asses like us asking you for information and all the rest of it. So it's how you continue to balance having what people deem to be institutional capital alongside running a very, very good venture seed business.
Great, thanks, Kunal. Rajesh, let me just turn it over to you. For those of you who know, Rajesh is like I mentioned, a portfolio mentor working with some of companies based in Hong Kong, but India is very dear to his heart. If we look at the theme of the Force Awakening, Rajesh, what has excited you about most of the Indian entrepreneurs that you've seen and you're working with, and what should we and they also watch out for, right? I mean, sort of a dark side theme where last year So very quickly, it's been focused on fundraising, and everybody's talking about company building, getting back to basics. What would you like to see of Blume's companies and just entrepreneurs in general?
I think the sort of development of whole this entire startup sort of environment is very recent in India. So when there's been a really big wave in the last 5 years when so many young entrepreneurs, graduates, they decided to sort of not go after the typical corporate jobs, but take the risk and then start something on its own. So that I think is the first sort of big change I've seen in India. And also the sort of entrepreneurship, which is typically, the blood in every, it's in every Indian's blood to try and venture out something on their own. I think what the new sort of startup entrepreneurs need to focus on is the context in terms of, their business models, the application, not just in India where we were talking in the previous panels, the addressable market size in India is still relatively small. So the vision has to be really something which is big, which is global. And I think it's not just about the software, the technology, but also the hardware side. So it's both, the engineering sort of talent we have, as well as the software talent. And I think Grey Orange is a very good example of marrying, both those aspects. And where I think the focus will come in, and which is really the challenge now, is how you use the funding in a very sensible way, watch out for the burn, make sure you learn from the mistakes, and that's where you need to have really good mentors, good advisors to sort of address, where not to make the same mistakes or not to burn the cash or spend time, but focus on really a few things which will really make a difference and move the needle. So I think what I've also seen is in the Sanjay, some of the companies I've been involved in a sort of mentoring role is really the openness of the entrepreneurs to really take and accept advice, engage in a discussion. So the engagement piece is also very, very important. And I think where Blume has really played a big role is, I would really describe, Blume as a fantastic network orchestrator, where they have been really had a very good eye in terms of connecting the entrepreneurs, the founders, with advisors, with investors. And that needs both very good IQ, but very importantly is the EQ side, the soft side of things. In terms of, because at the end of the day, with this kind of model, there's no real track record or a rear view kind of, sort of benefit. So a lot of this depends on the gut feel and, how you view the opportunities and really the people dealing with those opportunities. So I think you have got now a great track record in terms of, some of the success stories you have got. And I think the next big step is really thinking a bit bigger, bolder, and then building up from there.
Thank you. Also, I think we're running, there's one last panel, so we're running a little late. So I'm going to, no questions for now. Everybody's open after the bar for dinner. But I want to thank the panelists for our earliest, for our current and new supporters, and Akash, and actually a shout out to all the Blume entrepreneurs out there. We are only a collection of our companies. So thanks to all our Blumiers out there. Thank you. Thanks, man.